Well, hello everyone. K Kim here from Traders Club. Well, you know what? I am actually happy to come to you with this video because I know it's been a while since I put up any video or any kind of article. Well, just to let you guys know that I've been actually focusing on more longer term trade setups. So trade setups that is going to give us for the next 3 to 6 months out or 6 to 1 year out. Those are the setups that I've been focusing on. Because of that, I haven't been swing trading. I don't day trade at all, and really it has been. And even when I swing trade, I don't like to get in couple days. When I swing trade, I like to get in trades for several weeks to a month. And so like early March, I realized that this market is going to become very choppy, and also forecast that we might even see bigger decline. And because of reason, I haven't been swing trading at all, and because of reason, I haven't been really active, updating my blog and things like that. However, I wanted to do this video so possibly let you guys know what I think where the market is possibly headed. I do think we're gonna get into a true correctional mode in the overall market, and I do think that we might see much lower prices at S&P 500, and I do think that we may not see new highs anytime soon here. And let me just explain why I think that happened. And let me actually just let's forget about all these indicators. Let's forget about all the different things that a lot of statistics or the Tuesday things, or Tuesdays the stock went up every day. Let's forget about all of that. Let's just look at pure technical analysis. Let's look at pure price action. All right. Let's just do that for today. What I wanted to see is this. What I want to say is this. Obviously, when we look at S&P 500, buying when we get above 50 MA or all these moving averages did work out pretty well. Since the November 2012 here, when we got above moving averages, you can see right there above moving averages, 50 MA, 50 MA. Above 50 MA there, got above 50 MA here, back above 50 MA and 10 MA, 20 MA, 50 MA, got back above 50 MA, 10 MA. That's a good spot. It was a good spot there. And then we're back to that level of possibly being that level to buy the dip. And if you didn't buy it here, which it was also kind of a buy signal here because we got back above 50 MA, 10 and 20 MA, well, that was quickly sold off. So here's the thing. What I was saying is, I think I read an article, I think like early March, that as long as we're above this pivot, benefit of doubt continues to go to the buyers because of the fact that this is a very strong pivot level. What I mean by the pivot, it means it has acted as resistance in the past, and now it is acting as support. As long as this is continue to act as support, dip buyers are going to continue to come in, and they can try to push it higher, right? And indeed they did. They got it down, get back up, came back down, and got back up again. And then came down again, and then decided another push to the upside. Well, that failed, and in that process, we had to create a lower high, and then created lower lows, and then now we're back above this level. So question is, well, since we're back above this pivot level, can we say that benefit does go to the buyers at this point, since now we're back above this pivot, since now this might be some kind of a bear trap? Well, I guess I can't say that right now, for the fact that now I know that this pivot level has been broken, and then now we got back above that level. I get that. However, in the process of breaking this pivot level, what it did is it has cultivated lower high and lower low. You see that. And because of this lower highs and lower lows that we have, now this pivot level doesn't mean that much. What's more important is this price action here. If we're not able to get back above this level, we can assume that there's another leg lower coming. Do you know why we can assume that? It's because that's exactly what happened in the Russell and the NASDAQ. You can see that this is a pivot level, right? This right here is a pivot level right here. You can see that it has been acting as a resistance in the past, and then act as support. So insinuation is, as long as we're above this level, benefit of doubt continues to go to the buyers. Well, that level was broken. You can see that right here. That level was broken and breached, and then this thing came down. So now benefit of doubt does not go to the buyers. But what happened was next several days, it got back up, and then we got back above that level. and above this pivot. So now people can call this as a possible what? Bear trap, and we're back above moving averages. And last times when we were back above moving average, this was a dip buying opportunity. So what happened was people bought at this level, and then quickly they realized that wasn't such a good move. And again, this is where I wrote an article called "The Market Characteristics Have Changed," because of the fact that we have cultivation of lower highs and lower lows. See, once we have cultivated lower high and lower low, this, what happened was these pivot levels didn't matter anymore, because even we got above that level, this thing came down and came down hard. It got back. We're trying to get back up again. You can see that. But thing was, this force coming down from this, this intermediate downtrend, because what is the definition of a downtrend? It's a lower lows and lower highs. There are three different phases: primary trend, intermediate trend, and the minor trend. And we're looking at intermediate trend here, and you can see that we're cultivating lower highs and lowers, which is downtrend is still intact, which means as long as we're below this lower high, benefit Dow continues to go to the sellers, because we have put in lower lows in the process, and we have been cultivating lower highs. Same thing happened on the NASDAQ here. What happened was, let's say if this was a pivot, you can see that this was a pivot right here. Same perspective goes here. Old resistance becomes new support, and when it does, it becomes a pivot level. I call it a perspective level, because I say as long as we're above, the perspective is as long as we're above this level, benefit Dow continue goes to the buyers. Well, indeed it did. It goes up, came down, retest, went back up. It came down, tested it, it got back up, and came down, tested it again. But then when it breached that level, well, benefit Dow didn't go to the buyers anymore. Benefit Dow continue to go to bears as long as we're below. Now we're below this level because we're below the pivot. And then we declined a little bit more for several days, and what it did is this thing, the bulls brought it back up, and then now we got back above the pivot. You can see it right there. And not only that, at that point we got above all these moving averages, 10 EMA, 20 EMA, and 50 EMA. And this is where dip buyers tends to buy, because that's what had been working. Because it's been working, why not keep doing it? And you know what? That's nothing wrong with that, because if it's working, keep doing it. That's how you make money in this market. Trend is your friend. Keep, you know what I mean? Continue to do that, what has been working. Only difference here was that, well, we did have the slight lower high though, but nobody really knew. I didn't know what was going to happen. This actually did kind of look bullish to me as well, because we're above all the moving average. But once we had that sell-off like this, I knew the characteristics have changed, because now we have cultivated 3 lower highs and lower lows, and then we continue in there. We came down, we had an attempt to bounce, but we cultivated another lower high. So at this point, it is trying to move higher, but we do not know, because recent price action, last month or two, maybe month and a half, it has conditioned traders to sell the rips here. We get a rip, we get a move to the upside there, and then it gets sold. Because of that, as long as we're below this level, benefit of Dow continues to go to the bears. So that logic applies to S&P 500, and it is a warning signal. It is a troubling signal that while the S&P 500 is up here, NASDAQ and Russell is down here somewhere. And some people think that there's some kind of rotation where, well, NASDAQ is going to be here and S&P 500 is going to be here, and then once the S&P makes its move, NASDAQ is going to V-shape higher. Well, that is probably not likely, because, like I said, we are in an intermediate downtrend. Lower lows and lower highs. This thing is just not going to go straight up from this point. What you need is a cultivation of higher lows and higher highs for it to break this downtrend, and at least break this curse of downtrend of this intermediate term, and then make it move up. I don't think it's just going to straight up, and for that reason, I'm not sure Spider can able to go straight up either. You know what I mean? It has always been the NASDAQ who always likes to lead this market. But when the leader is leading to the downside, there is a huge warning signal there. So looking at this intermediate term, we did have pretty well defined lower high here, and we're still below that level. Let's say tomorrow or Monday, if this thing gets bearish candle here, I'll be pretty sure that this thing's gonna make new low. At that point, it's gonna be a new low, lower highs, and then you're gonna get back to probably about this 200 SMA, which is about 176, 177 area, possibly come all the way down to about 174. And the huge cautionary signal about that is once we get an equal lows in the market, because we've seen that happen in Russell. What we saw in Russell is this: we got an equal lows, and that is a huge cautionary signal. Do you know why? Because what is the definition of uptrend? You can see that we have this not only broken this long-term rising channel support level, but we have put in equal lows. Well, the definition of an uptrend is higher lows and higher highs. And how do we know that when that uptrend is broken? When it comes down and put in this kind of lows right here. And I give you a good example right here. We put in equal lows right here, went up, failed to make new highs, made a lower high, boom, came down. Same thing happened here, equal lows, right? It failed to make new highs, made a lower high, boom, came down. And I'm not saying that's exactly what's going to happen. What I'm saying is that is a great example to look at this uptrend, especially when we had this steep bullish uptrend and that uptrend channel has been broken, and now we're putting equal low. This is a huge cautionary signal. We might get bounces here and there, but if he fails to make new high, which is way up here, then there's still gonna become as a lower high, and that could still be in some kind of head and shoulders formation. We could have a pretty steep decline, which I think that's what's ahead of us. And I mean, we might get bounces here and there, up and down here and there, volatility here and there, but I think that's what we're looking at. So as far as the spider is concerned, it is troubling because when spider's up here, NASDAQ and Russell's down here. Also looking at financial sector, it is also troubling. Like you guys know that I like to look at the banks. I like to see the banks do well for this market to continue to be in a healthy state. And you can see that what we saw was, it likes to form some kind of a double top here in this strong resistance level. We got double top here, double top here, double top here. Well, this time we had a triple top, which makes it even worse. Triple top here, neckline was broken, boom, 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 right? So there's a confirmation triple top. In that process, we have created lower high, lower low. We're going up. But again, we're in a cultivation of lower lows and lower highs. You see, when this thing came down pretty much straight down. This was a bear flag. This wasn't a lower high, lower low. This was a bear flag, and then came down. Same thing here. This pretty much came straight down with the bear flagging action there, and then it went straight up. So what a lot of traders are trying to do right now is buy the dip, so that they can grab this run, because what they're seeing is, well, this here and here and here and here. Same thing happening in S&P 500. Same thing is happening other indices. That's what they've been trying to do in the NASDAQ and Russell. That's what they keep forming this higher lower lows and lower highs, because these traders been trying to buy the dip. It didn't work out as far as the NASDAQ and Russell is concerned. Same thing happened here. This dip didn't work out either, right? After doji, that was a good formation of doji, and they had a follow through, so maybe a doji reversal. Well, that didn't work out, and then we caught up in this neckline, tanked, and going back up there. So now with that lower high still intact, benefit Dow continues to go to the sellers as long as we're below this level. Financials were not even above these moving averages, and you can see it is going up with fear. We're not seeing full-on candle like these. You can see those are big candles. Those are huge, long, full-on confident candles. These candles does not look like of confident candles there. So though we are at this support, right, this uptrend support, we still have this intermediate downtrend going on in process, and continue to establish that downtrend there after forming this triple top reversal pattern. That's a huge warning signal. If this thing comes down, make a new low, which it could happen even not tomorrow, but next week, that's a huge warning signal. So I mean, we don't have that yet. We don't even have a signal of that happening either. So I mean, we have to watch that, but keep in mind this chart pattern of lower lows and lower highs here, because downtrend is still intact. So as far as so last, let me look at Spider here real quick, and then I'll let you guys go. If bulls cannot able to get above this level, I would have to say that the downtrend is going to continue and the selling could continue. And when this thing comes back down and break this low, we'll probably come to about 176 area, which is about, yeah, this is where the 200 SMA is residing. So if that would be probably the first level. If that gets broken, probably come back to this low, and then that's when it's going to bring equal lows. And we all know when S&P 500 put in equal lows on this primary trend, do you know what we can happen? Because last time, exactly where do we see an equal low here? Right on this 200 SMA there. This is what I warned you guys about on my last video on midweek update. And so if this thing comes down about 200 SMA, put in equal lows, and it bounces, comes down, we're gonna have a steep decline. Again, we're not there yet. But the problem is NASDAQ and Russell is already here. They're already somewhere here. That's the problem. Lastly, let me give you this before I let you guys go as a bonus chart, you can call that. This is a VIX layover with S&P 500, and obviously last 2007 area when S&P 500 started making higher lows, VIX also made a higher lows. I mean, this is what is higher lows and higher highs. That's the definition of uptrend. When the VIX is making an uptrend with S&P 500, that is a huge cautionary signals is flaring everywhere, and sure enough, we had a huge market correction there, and we don't have that kind of a price action here. So I don't think we're gonna have a market correction. What we do see is we might see some kind of a correction move there. You can see that formation of higher low, and then we had that decline there, formation of higher low, we had a decline there. Same thing happened all of these higher lows here. You can see that this low is still higher than that low, though we did have some decline because last several days, market spider did go up. So with the VIX, having inverse relationship to S&P 500 did come down. But as far as the chart pattern is concerned, we're still holding the formation of higher low. We've seen something like that happening as it comes down. It went up, came down, but it kept cultivating higher lows here. Same thing happened. It came down, but we held up that higher low stance, and then we had that correction here. So this is another signal that you can gauge, with the market there. Last time we had higher lows 3 times, higher low, higher low, higher low, bang, the market came down. So if you look at that, the VIX and the NASDAQ and the Russell and the financial with the lower lows and lower highs, when you look at S&P 500 alone, yes, it does look like it may able to get up here, make new highs, and then just continue higher. But when we're seeing the other indices and the banks and the VIX and there's other charts that I look at to gauge the market. There are other things I look at, other indicators I look at. What it points me to is that we're going to see some bigger decline that we've seen in the past. I mean, like many people thought that these were correction, this were correction, this were correction. I don't know if those are correction. I think those are just a pullback within this kind of a channeling action there. I think we're just, in my opinion, we've been just really channeling. You know what I mean? We've been moving higher. You know what I mean? So we really have a correction will be that once it breaks certain support and then gets its decline, that will be a correction. I mean, everybody has a different way of defining correction, but I think, what I mean by correction at this point, that we actually get below this 200 SMA, that would, to me, we seeing something like this kind of move will be a good correction. You know what? To be honest with you, I would actually welcome that. I really would. It will still be in a primary uptrend if this thing comes down here. Even if this thing comes down to 170-ish level, we're still in an uptrend. You know that. Boom, boom. And then the market can go even higher. You know what I mean? So, I mean, I don't know why so many people just freaking out, or why so many people just hate the bears and they're making fun of each other. I don't get that. They're just always making fun of each other, blah blah blah. Just I don't get it. What right thing is, if we do get a correction, that is a great opportunity to start going back long with the equities. Maybe start going back long on Netflix, start going back long on Google, start going back long on Apple, start going back long on Tesla. That would be a great opportunity. It is difficult to trade, unless you're trading very, very short term, but it is difficult. You're gonna get enough for longer term trade. You really want to see market digest some of this move and come down for a little bit, and then let market go back up there, and we probably see a bigger move. We're probably gonna see, if you get this kind of correction, we're probably gonna see this kind of move. Maybe get to even back to 235. But if this thing keep grinding higher, sooner or later it's gonna crash. So why not see some kind of a digestion move and then continue? So in my opinion, I would welcome the correction, some sizable correctional move, something like this here. I welcome that, and I also think it's actually going to happen. I actually think that move is probably what's ahead of us, maybe next month or so, maybe two. I don't know, but from my research, I think we're going to see decline. I think it's going to be difficult to market to just go up from this point and make new highs, and that's just my take. And hopefully that can guide you in your way of trading and investing. If you have any questions or any kind of comments, feel free to use this blog page, comment section below, and then I will make sure to return your message there. So enjoy your evening, and we'll talk again.